Still morning. Good morning, all. So, thank you very much for the introduction. And I've learned a few things with all the co-presenters here, with the digital inclusion and what is happening in the financial inclusion field. First of all, I would like to extend my thanks to CORE for allowing us, Nasfund, someone from Superannuation, to speak about this industry. And I acknowledge presence of a Bank of Papua New Guinea Chairman, Mr. David Toa, and Director Mr. Mark Baker. And also we have here Shez Cockle, who is Director of Nasfund. He is also present here, so I'm acknowledging him. And let's just start. This is we're talking about sustainable economic growth of superannuation industry. So first few slides, I'm going to take you through the industry, and then we'll talk about Nasfund. So if you look at the slide, what it tells that in 2000, the entire NAV of this industry was less than $1 billion Kina, about 918 million. And till 2023, the number rose up to 17.6 billion. And if you look at the growth, now we've been growing roughly in every 5 years about 5 to 6 billion. Now, this year, I'm hoping that we all will close somewhere around 18.8 or 19 billion will be the fund value. What it means that the overall growth of this industry has been very significant over last 24 years. Roughly 18 billion of funds has been accumulated by the members of various super funds. And it is very significant in terms of 14% of GDP we represent. But if you compare this with other countries, Australia has got 145% of their GDP in superannuation funds. And if I compare this with Fiji, the Fiji has about 70% of their GDP in superannuation funds. So what it tells that there is a lot of road yet to be covered. A lot of people is still not in the superannuation. We talk about unbanked here. There are a lot of people not in superannuation industry itself. Now, second slide, similar representation by numbers. About 9% of the population is covered. If I look at Australia, it is 62%. Fiji, we are about 43%. When I talk about Australia 62%, what it means that people less than 18 and over 65, if you exclude them, it looks like pretty much everyone is covered there. So again, it tells the same story. There is a lot of improvement, lot of work to be done in this area for us. And one such reason is because there is no universal coverage in Papua New Guinea. If you are not employing 15 people or more, you are not supposed to contribute. And that creates a huge gap in the numbers, because there are a lot of companies who are SMEs and they have less than 15 and they don't contribute. Now, superannuation industry prior to 2000 and post 2000 are two different characteristics. Like if you go prior to 2000, investment management job was being done in-house, board was appointed by the government, and fund admin, the three functions that was done in-house. But post reforms, which we'll call Superannuation Reforms Act in 2000, what has happened is now we have outsourced licensed investment manager. It means a board or management independently cannot take any decision on investment. It means it needs to come by a third party who vets the entire proposal which comes to us. And then what fund administrator does is, as Nasfund, we keep overall one balance in our general ledger which calls the members balance. But details of those member balance is managed by someone else, which is in our case, Kina Bank, rather they are in fund administrator for the entire industry. They keep those accounts. It means I don't have access to individual accounts. Individual accounts are maintained by them. So it's a very good practice to have, a good transparency around it. And third is now we have independent board of directors. So board of directors are not chosen by someone. So there's completely independence there. So these three significant events which separates superannuation industry in post-2000 and pre-2000. Now look at Nasfund growth. In 2000, we were only 223 million. And this number up to 2023 end, we were about 7 billion. And currently, as of November, we were at 7.8 billion. So there is significant growth in industry. When we talk about overall growth in the entire industry, that was about 17.5 to 17.7 billion. Out of that, about 7.5 billion is contributed with Nasfund. So our growth during last 24 year has been at a much faster than the growth of other players in the market. And similarly, in membership, we currently have 688,000 members. We used to have 205,000 before, and currently we sit at 720,000 as of November. And we've been growing about 5% every year in the last 23 years. But there is a challenge in this number that we have active and inactive membership. Inactive members are those who have not contributed in the last 6 months. And active membership is those who contribute. So there are reasons around that why we have active and inactive. People change jobs and they have multiple accounts. Or people, when they lose job, they stop contributing. Or people who have reached 50 years, 55 years of age, they have taken retirement and not withdrawn funds from us. So these are the inactive categories. So what it does is it also does one more issue it brings to us, that digitalization effort, when we do, we think that we're going to reach out to all the members, but it is very difficult to reach inactive members. So still we need to have a brick and mortar function, a kind of operation model working there. So we need to work the dual model. One is we need to create more branches so that inactive members can go and access our systems. At the same time, we have to spend money on digitalization so that new age members can access all the facilities from the comfort of their home or offices. Now, in terms of crediting rate, Nasfund's crediting rate has always been over CPI. And when I talk about results of superannuation, I urge all of you not to look at particular year's result, because superannuation is a very long game. It's not something you play in 1 year. 1 year I may have done very well, and second year I may not do well. So whenever you analyze a superannuation, you look how your superannuation fund has done, you must look at the block of minimum 5 years. Last 5 years, our return was 6.12% against CPI of 4.9. 10 years was 6.19, 15, 7.66, and 20 years return for Nasfund members has been 10.67%. So again, it tells a story. The more longer you leave fund with your funds with the superannuation fund, it grows, because over a period comes the impact of compounding interest. Now, very important thing about superannuation is, are we liquid enough? Because when you retire, you always need to have enough fund in the superannuation industry. So if you look at it, we would have paid roughly 2.6 billion kina in last 5 years to all those members who have exited. So it means we always create this liquidity within our system because we need to pay. And why payments are such a high amount of payment? Because their act allows people to withdraw money when they are unemployed for more than 3 months. They can come to us and they can withdraw some part of money. And when they're unemployed for 12 months, they can take the whole money out. So it does not happen in any other geography, it doesn't happen in any other part. What it means, it is a glorified bank account. It also means that I cannot take a very long shot on our investments. We always need to be more liquid than all the funds in Pacific or in other region, and that impacts my overall return. Now, strategic assets allocation, where we spend our money and where we basically invest our money. So one part where we invest our money is about 46% of our money sits with government in shape of GIS or T-bills. Roughly 37% is GIS and 7.8% is T-bills. 16% of our investments in overseas. Act allows 35%. Our SAA currently says 20% plus. So we are not meeting our SAA because we don't have enough FX to basically bridge that gap. Then our property is about 11%, and PNG listed assets are 12.5%. Other equity is 1.8%. So it basically adds up to 100%. Now, this is a very important slide. If you look at this slide, we have about 700,000 members. Now, out of 700,000 members, As of last weekend, we have 177 members whose balance with us is more than 1 million kina. And over 771 members are where balances is in between 500,000 to million kina. And over 5,000 people are the one whose balance is more than 250,000 kina. Now, this number, if you take in any other geography, it should be far more higher. And it's a great number, those people who have achieved this million kina. I mean, congratulations to all of them because they have done the right thing. They have not withdrawn the money, they have let the funds remain with Super Fund for the long time. Because the longer you keep the money, the impact of cumulative interest comes into the play and money grows. But if you withdraw the money, it does not happen. As Guru Warren Buffett says, compounding interest is the greatest force in the nature. It is called eighth wonder. Now, small example, if you have 50 kina per month, and if you deploy that 50 kina per month for 30 years' time, the overall amount, what it will become is 40,000 kina. And if you have 150,000 kina, that will become 122,000 kina. So that is the impact of compounding. Small money, but consistent money. Because retirement does not come by surprise. If you are 40 years of age, definitely it is going to come by when you turn 55 or 60, depending on when you choose to retire. You won't be surprised all of a sudden, oh my God, tomorrow I'm going to retire, I have not done enough. So this is a finite number which we all need to work through. And if it is a finite number, then we need to look at the products as to what we need to do to secure that we have enough money when we retire. Now, how do we join this club? Now, we have done a small modeling. If you have age 50 and your salary is 50,000 kina, and we are assuming that every year your salary grows by 3%, and return for the fund, which fund gives you is 5%. In reality, we have seen a return is far more higher. So if we calculate on modeling on the basis of these parameters, someone who is age 25 years of age, he earns 50,000 kina, he does the superannuation contribution on time, when he turns 60, he will have 1 million kina. So to have 1 million kina for those who are 25-year-old shouldn't be very difficult, provided they don't withdraw the money. Now, Income Tax Act and Superannuation Act allows that you can contribute more. Up to 15% we can contribute, as opposed to 8.4%, which is allowed in Superannuation, in Income Tax Act. So if that contribution is 21% instead of 14.4%, then this number of 1 million goes to 1.6 million kina immediately. So we are working on such modeling because what we're trying to achieve is, as we said, we have a digital landscape where we talk to a lot of people that, okay, you shouldn't be coming to the branch because we have our online portal, we have website, we have, if you can come, you can download our app. When you download our app, you will get all the information which you need to get. And then we have an easy call service. You call, you get pretty much all the services which you will go and get when you come to our branches. And then last year, basically, we launched something called WhatsApp appointment. It means if you have to come to our branch, you don't have to come to the branch and take a ticket from the vending machine and wait for 2 hours. From the sitting at your office or home, you can book the appointment, decide that I want to go to Boroko branch on Wednesday at 1 p.m. and appointment will be given to you, and you can reach there 5 minutes prior, get served, and come out. These all you can do without wasting time. And then, again, we're working on a lot of AI solutions. We are trialing something in our finance team. We are trialing some AI product for the member benefits. Very exciting. I mean, intelligence, whether it is artificial or it is real, it should be all appreciated. So we're basically working on a couple of products, and those products will be launching very soon. Now, what we are offering everyone is, like we have heard about financial inclusion. I think about time we should talk about superannuation inclusion now. Because why we say superannuation inclusion, the next slide which will go by, is life expectancy around the world is increasing. In Papua New Guinea, it has increased. 75, it used to be 50 years. Now we are close to 63 to 64 years. What it means that everyone would live longer, everyone would have at least a decade of life when they would need money when they retire. Now, second important thing when it comes to retirement is the impact of inflation. Like even if we consider there is going to be 3% inflation in 30 years' time, it results into 2.35 times your expenses. Inflation is something which is very underrated, and we should not be discussing about inflation when we talk about inflation. What is Papua New Guinea inflation? Everyone needs to calculate their own inflation. If your basket which you go to the supermarket and buy costs you 500 kina today, and it is going to cost you 550 kina next year, your inflation is not 3% or 4%, which is government's inflation. Your inflation is 10%. So when you plan your retirement, that is what you need to know. What exactly is your inflation? So based on you're going to live longer, going to need more money when you retire, and you know when you're going to retire, you know how much you are earning. So based on that, targeted presentations can be done, and we're working on those, and that's what, because each sector is different. Like banking sector or resource sector, retail sector, they have a different kind of membership base for us. And that's what we're creating is we are requesting all the members, all these employers to give us opportunity to come there and present to the particular segment in their age groups. Because requirements for those who are 50-year-old is very different from requirement for those who are 30-year-old or 20-year-old. Or someone who earns 100,000 kina and someone who earns 20,000 kina. So one size doesn't fit at all. It absolutely, it is very, very, we have seen that it doesn't work when we give one presentation. So 2025, this is our one of the strategies to go talk to more and more employers, talk to them about what challenges we are facing, and we are happy to come and do the targeted presentation to them. Now, whatever we have discussed pretty much, these are the 4 basic mantras, how we can grow the superannuation. We can increase the voluntary contribution, which is employer contribution, from 8.4% to 15%. You can increase employee contribution, which is post-tax. There is no limit to that. Currently, Act says 6%. Depending on your situation, you can contribute as much as you can. And third is please don't withdraw money when you get unemployed for 2 months, because when you're unemployed and you withdraw some money and you think you're going to recoup that money, you can recoup that money, but we're going to lose the impact of interest on interest, the impact of compounding interest on all of that. And start early in the life, because as I said, at 50, you will not have enough time to save money for your retirement, and we're all going to live longer. That is good news, but again, we need to be ready for that. So with these words, I'll take your leave, and thank you very much for listening to me.